Hi, everyone, and welcome to Hult Expert Talk, the podcast where we explore the ideas, people, and innovations shaping the future of business. I'm your host, Christian, and I'm a dual degree student. Today, we're diving into a fascinating topic: the future of finance and analytics, insights, and innovation. Joining us today is someone who lives and breathes this intersection, Professor Thomas Kurnicki, a leading expert in data and business analytics at Hult International Business School. Professor Thomas has worked with major financial institutions, consulted on cutting edge analytics strategy, and is passionate about preparing future leaders for this data driven era. He also happens to be one of my professors from my business analytics program. So, Professor Thomas, welcome to the show and nice to see you again.
Thanks. Likewise. Very excited to be here with you today. That was a very nice intro. In reality, it was a lot of hard work, a lot of days of coding, of getting my hands dirty, whether it was at one of the largest real estate companies, or whether it was at one of the biggest US banks here in the USA. It was really hours and hours of working with data. It sounds wonderful, and it is. It is at the end very exciting to work with data and the intersection of data and finance. But as much as it sounds great, it was a lot of hard work. So just wanted to mention that because we do like to get excited about AI and machine learning and all things artificial intelligence, but it is hard work, and that's, I think, what we're going to talk about today. So back to you, Christian.
It really is a lot of hard work. And I think that's why we're here today to pick your brain a little bit about this whole industry and where it's going in the future. So let's jump right in. Finance has always been about numbers, but today's data capabilities have taken that to a whole new level. How is data being used today to solve some of the biggest challenges in the world of finance?
Yes. So it's been used today as it's been used for the past 10, 15 years. So not much has changed for the bulk of the use cases. Okay. And but there are new use cases. So let's first talk about the old use cases, and then we can talk about the new use cases. For the old use cases, this could come down to things in risk management. That's the first thing that a large financial institution wants to do, whether it's a big bank, money manager, insurance company. It all comes down to risk management. So risk management has a lot of different flavors. This could come down to things like regulatory analysis. This could come down to responding to regulatory body questions. Here in the US, we have the SEC, Security Exchange Commission. We have the OCC. We have the FDIC. So a lot of regulators that are knocking on the doors, not only for a big bank, but for, like I said before, investment manager, investment firms. This could come down to insurance companies. So all of these financial institutions are highly regulated, not only in the US. I've worked in Europe for a few years, and every country has their own regulatory body, and then the European Union has their own regulatory bodies. So these financial institutions are highly regulated, and a lot of data is being used to answer those questions. And that's part of the risk management umbrella. But there are going to be also internal risk management questions that leadership is asking for, right? How are my clients being exposed to particular products? How are my clients being exposed to particular industries that could be higher or lower risk these days, right? For many years, emerging markets have been deemed to be at high or medium risk, but over the past few years, that perspective is actually changing. And some economists are claiming that domestic markets, whatever domestic means for you, but for us, it's here in the US, are increasing in risk, right? Which was unheard of for many, many years because the US was considered to be less risky, highly developed, less risky. But over the past few years, things have been dynamically changing. So how do I support those answers using data? Right? Is the biggest elephant in the room. And that's what they hire us for. But that's risk management. of course, there are more details. I was in particular part of the investment risk world. So how risky are portfolios, how risky are assets, how risky are stocks, how risky are bonds, within stocks, what are the riskier asset classes, minor asset classes, what are the least risky, and then clients. It all comes down to helping the clients match their profiles with products. So there are going to be clients that are more risk averse, and how do we match them with the products? There are going to be clients that are more or less risk averse, right? So it all comes down to really serving the client and suggesting the best product that we can find out there with a given client's risk aversion profile. So again, just a few examples to provide here, but it's not just risk management. We could use data to intelligently answer customers' questions. So it comes down to operations. We could use data to build chatbots that help our customers solve those easy questions. And now we're kind of going into the newer use cases for large or enormous data that we see. So like I said, chatbots. This could come down to improving the apps that all these financial institutions have these days, apps that allow users to access the services and the products, right? So when you go and you bank, let's say with JP Morgan, you want that user experience to be as fast as possible, as seamless as possible. And to do that, engineers need data. Engineers work with us, with data scientists, to analyze a lot of usage data, click-through rates, click-through data, and how people interact with these endpoint solutions, right? So just a few ideas here to mention. And maybe one more thing to mention here is that there seems to be a new school of thought in the finance world where leaders, organizational leaders, really want to make faster decisions. It's not really these days about data-driven decisions, because this has been the case for many years by now. But the new usage of data is, how can we shrink the decision-making timelines so that things are being called upon not in weeks or months, but in days, minutes, or even real time. And maybe some of you have heard about things like high frequency trading, right? Not really a thing anymore, but years ago that was a thing, right? So the sooner I can make a decision, the shorter the time frame between the question and the answer, the more accurate I can be, the more relevant I can be. These days, talking about the new ways of using data, not the old ways like risk management, operational efficiencies, maybe fraud detection or client segmentation. Those are the ways that we've been using data for years now. Okay, let's say 15, 20 years. The way we use data now, and the objectives of the data usage pipelines, data pipelines, is to shorten the decision-making process from days, weeks, months to hours, minutes, or even real time. So, for example, Christian, you come to an investment manager, want to mention T. Rowe Price, for example, and you are saying, I want to invest with you $10 million. You're a high net worth client, right? Instead of waiting weeks and months to get a product, a solution, a custom tailored to your profile solution, because these days clients want personalized products, personalized approaches. Instead of waiting weeks or months, you expect to get a solution right away, right now, today, in this meeting, before you leave the office. And that's how a company can better address client needs. That's how a company can stay ahead of competition in terms of grabbing the customer and offering some solutions. So I think that's where data is going. It's a game of making a company more relevant and with a faster to market delivery of products and services. That's my opinion.
I love that you doubled down on being customer centric and improving processes and being more efficient in terms of all the things that are being done right now, and how we're headed to the future, which has a lot of also has a lot of risk, but also a lot of rewards. So that's incredible. So we're not just talking about historical data anymore, but truly predictive, actionable insights. So my next question to you, Professor Thomas, is this shift is not just transforming systems, it's reshaping entire careers. What are some of the most exciting opportunities right now for professionals working at the intersection of finance and analytics?
Fantastic. This intersection is very exciting because a lot of things are changing. Now, again, just like we have talked about the old way and the new way, we still see a lot of openings, career openings in the old ways of doing things, right? So, engineering jobs, data science jobs, mathematicians getting jobs. They still call them analytical roles, right? Where you would just use a lot of SQL to extract data, use SQL to create tables, create views, kind of hone in on that database design, whether it's an engineering side or a analytical side, they would still hire for those roles a lot because a lot of this data at big financial institutions are is that data is structured, right? Um, you will still need quantitative analysts. You will still need statisticians. So if you have that kind of background in mathematics or statistics, you can find a job in finance very easily, right? Especially if you learn finance. If you come to Hult and learn finance, learn investment management, learn banking, learn international finance or corporate finance, you can apply for those jobs pretty easily and get a job really quick. But there are newer frontiers, newer careers that a lot of these financial institutions are looking to explore. And these are usually related to unstructured data, right? So, all things considered, large language models, right? Or analyzing photos, analyzing videos. And you will see new roles that pop up, such as LLM engineer, so large language model engineer, or unstructured data analyst, or you would see things like AI data scientist, right? Machine learning data scientist. So very specialized, niche, narrow opportunities, narrow roles that relate to the current landscape of AI, right? And just to debug that, what is that? I guess it all comes down to how you define AI, artificial intelligence. But one thing that a lot of people agree upon is that AI relates to predictive modeling, to all the um, mm, well, that's a good word. Predictive modeling related to unstructured data, which is text, large text, photos, videos, and maybe other types of data. But those are the three main categories. And that's what we see that banks need these days. Banks need smart people that are in the intersection of statistics, mathematics, analytics. I want to say data science, analytics doesn't have to be statistics, right? But analytics, data science, and finance with some knowledge of how financial institutions work and being able to work with long text, work with photos, work with videos. That's what I would say. It's the old group of career paths, and there are these new career paths related to unstructured data. And I'll leave you with that.
Unstructured data is definitely part of the future. It's inevitable. It's everywhere, and I definitely agree. There you have it, folks. It sounds like the financial professional of the future needs to be both fluent in money management and machine learning. Now, let's dive a little bit deeper into that. Let's talk about one of the hottest topics, which you have already kind of mentioned, which is artificial intelligence, and more specifically, large language models like ChatGPT. How can AI and LLMs in particular revitalize what some might call the old school world of finance?
Yeah. We still don't really know how it's going to revolutionize it, right? Because we have the old school kind of finance and we have the new school of finance, and we don't really know how it's going to revolutionize the new school of finance just yet. We have some indication as to how it might revolutionize it based off of what questions were being asked, based off of what swim lanes we are taken to follow. What I see personally being the biggest area of disruption is the customer facing side. So again, how quick can we answer customer questions? Again, years ago, it might have taken weeks to look into the data. It might have taken months to get back to a client. But these days, the clients, with all of the technology advancements, they want answers fast. They want a seamless experience, right? But so that's the first frontier. It's the interactions with the clients within financial institutions. Two, here's another frontier, would be to improve the current services and products and make them more customizable, personalizable for unique customer profiles. There's always going to be a customer who walks in that's going to be very unique, right? We call them diverse customers, right? And how can I address those needs without having to make 20 phone calls, without having to write another white paper or PhD thesis, right? And a large language model could help us do that, right? So that's another frontier. A third frontier would be to analyze more customer behaviors and then tailor those products based off customer behaviors. How the customer walks in, how the customer behaves. Is the customer more energetic? Is the customer a little bit more laid back or slower, if you will? How does the customer speak? Maybe the customer is very fast in how they speak and how they think and how they process information. And if that's the case, I should be giving them the content faster, right? But if they do speak a little bit slower, if they're more laid back, maybe I should tailor my response to make it sound like it's a little bit more well thought, right? So I just give you an example with my own voice and my own words, right? But that's, I think, how the next frontier is going to look like. That's on the client facing side. Now on the back end side, we do see model advancements. How can we improve current models that use structured data to perform better, perform faster, be more accurate, give better results to us risk managers? It doesn't have to be an investment risk managers. This could be credit card managers. This could be deposit managers. These could be transactional managers. How can we better our decision making with the use of unstructured data? How can we improve current models with data from emails, from customer phone calls, from surveillance at branches, from social media profiles, if our customers have social media profiles, because a lot of our new clients are millennials, right? And these clients do have a lot of social media content. So can I inject these new types of data into my existing models and increase performance from, let's say, using just one of the metrics like accuracy from 75% to 85% to 90%? Can I get better prediction of business success using these new data types? And I think this is where large language models, ChatGPTs, Roberta, Llama, you name it, or other models using image processing, and those models could be like a fast RCNN or a faster RCNN or a YOLO. I just mentioned a few models here to be more precise in my answer. How can we use those to inject the old school models and make them better and make them more accurate? Have less errors in those models.
I love how you gave a lot of very realistic examples of how we can use AI for good and how to improve systems on the back end, and also how we can give a bespoke treatment and how we can segment all of the customers in this new era of business and technology. So Before we wrap up, we always ask our guests just one question. And if you can answer it in one sentence, that would be great. What's one piece of advice you'd give to students or professionals looking to thrive in the future of finance and analytics?
One sentence. What a challenge. Mm, keep educating yourselves with the most recent technology and concepts. So I kind of tackled both hard skills and soft skills in one sentence, right?
Yes.
It's not just about the soft skills. It's not just about the hard skills. It's about the combination of both. Hard skills kind of being probably a little bit more important these days, especially given how artificial intelligence is taken over, right? We have to know how to use these models, and I've mentioned a few models earlier today, such as for images, YOLO, Faster, RCNN, for text mining that could be Roberta, Bert to Bert, or even ChatGPTs, right? You name it. Um, but I think it's really important for us to keep studying, keep learning. And Hult has this really interesting concept of lifelong learning.
Yes.
You're a lifelong student, right? And you can come back to Hult for electives every single year after graduation. So that's what I really, really like about Hult. I'm a Hult alumni myself. I graduated 10 years ago before joining these big companies in Silicon Valley. And I have to admit that Hult gave me a lot of skills that are important in my job today, right? In the intersection of analytics, data science, and finance, right? I myself am a master's of finance alumni. I've studied finance here at Hult. And before joining Hult, I've studied statistics and mathematics back in Europe. But that intersection kind of gave me that exposure to these concepts, and that's how I built my career. But I would just really suggest that you keep studying. Don't sit comfortably in a corporate chair, okay, or in your or don't become a couch potato at home, right? Which kind of COVID taught us to do. Go back to academia. Study the new frontiers of your industry, whether it's finance or analytics or both. Maybe you want to do a dual degree with Hult. So do finance and analytics and then be in that intersection just like myself, right? But do not be a couch potato. Instead, go to school, learn new concepts, study what is currently needed in the market. Be relevant, stay bold, be relevant, and do it.
I completely agree. You have to be relevant. Learning never stops. That is so true. Yes.
And Christian,
Yes.
before we disconnect, thank you so much for leading this podcast. Amazing, amazing job. I'm looking forward to new adventures with you. But given that we have some time left, can I put you on the spot and ask you a question? How would you, and I'm not gonna put you in the one sentence spot there, but if you were to give your own feedback on how has the whole, because before analytics, have you went into the marketing program? Did you do the marketing program first?
I did MEI, so entrepreneurship and innovation. Yeah.
Okay, I see. Interesting.
Yes.
So how does combining analytics with your prior degree um, kind of help you position yourself and your profile in the current landscape? Is it easier if you add these analytic skill sets to your profile on LinkedIn? Does it become more visible? Do you feel like you can achieve a little bit more with the hard skills? Like what's your take on combining an MEI degree and an analytical degree? Because maybe some of the folks who will join the finance program, our prospective audience for this podcast, they might be kind of thinking the same way, right? How can I get that intersection profile between data science and finance, or in your case, it was entrepreneurship, right? So do you
Mhm.
have any insights in that realm of the intersection?
So the goal for me personally has always been to learn both soft and hard skills. So the MEI program, Entrepreneurship and Innovation, really gave me that entrepreneurial mindset, and that's mostly about soft skills. And then when I went and did my dual degree for business analytics, it gave me those hard skills that are essential nowadays, specifically with what you have mentioned with your answers earlier. So personally, I want to be in the marketing field, and so having that entrepreneurial mindset really helped me navigate that industry, and at the same time backed up with the MBAN or the business analytics hard skills, gave me all of the things that I need to actually take advantage of all the data that's out there and really give more actionable insights and how we can move forward with whichever company I'll be working with in the future. So that's how I see it.
Good, good. Well, that's what I
Yeah,
thought because you're a marketing person, right? You're kind of passionate about marketing, right? So I can
correct.
only I can only envision that having the analytical skills like SQL, like R, like Python can help you, find that frontier of what's it called, marketing analytics, right? That's the buzzword, right? Marketing analytics. So just providing numerical insights to I'm just guessing here, maybe marketing campaigns or marketing
Hmm.
strategies or marketing managers, and then fueling their decisions with data backed answers, right?
Yes.
So exciting, exciting, very good. Well, thanks for sharing that perspective. I appreciate that.
Professor Thomas, thank you so much for your time. This has been an insightful conversation, and I'm sure our listeners are walking away with a fresh perspective on where finance is headed. If you're interested in exploring the field further, check out our business analytics and finance programs on our website and join us for more events this week, including Professor Thomas' masterclass on Thursday. To see our full program of events for the week, please visit hult.edu/discovery. And if you want to connect with Professor Thomas, please feel free to check his LinkedIn account. Until next time, stay curious, never stop learning, stay relevant. Thank you for tuning in to Hult's Expert Talk. Bye, guys.
Fantastic.